Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the financial jargon and legal mumbo jumbo, so you don't have to. Get ready because today we are dissecting a very interesting filing from Planet Labs PBC. Before we dive in, if you want more of these clear, no fluff breakdowns of important corporate filings, make sure you subscribe. And if you want to chat with us and a community of like-minded finance enthusiasts, you should definitely join our Discord server. The link is in the description below. So what we have here is a Form 8K filing from Planet Labs PBC. Now, an 8K is like a company's urgent news bulletin to the public. It's filed when something significant happens that shareholders need to know about right away. Think major events, unexpected turns, or important announcements. The big story in this particular 8K is about how Planet Labs is issuing more shares. Now, when a company issues new shares, especially if they are not being sold to the public in a typical offering, it can mean a few things. Sometimes it is tied to past deals or performance incentives. So back in July of 2021, Planet Labs entered into a merger agreement. This agreement basically set up a plan for how things would work when Planet Labs merged with another entity. Part of that plan involved potentially giving out more stock, both Class A and Class B common stock, to some important people involved in the original Planet Labs company. These were basically shares that were contingent, meaning they could be earned based on certain conditions. This contingent consideration was a big chunk of stock, up to 27 million shares. How could these shares be earned? Well, it was tied to the stock price. If the company's class of stock hit certain price points like $15, $17, $19, and $21 for a specific period of time before a certain deadline, or if the company was bought out for a certain price, per share, these shares could be earned. It was essentially a way to reward stakeholders if the company performed well financially. And this is where the current filing comes in. On the 21st of January 2026, Planet Labs PBC actually issued a significant number of these earnout shares. They handed out over 5.1 million shares of Class A common stock and nearly 600,000 shares of Class B common stock. Why? Because the stock price had hit $19 and stayed there for 20 out of 30 days. This means that a specific performance target linked to the stock price was met. Now, what do these new shares mean for existing shareholders? The class of shares they issued are pretty straightforward. They come with the same rights as all the other class of shares already out there. The Class B shares are a bit different. They carry more voting power, actually 20 votes per share, which gives holders of Class B shares a much bigger say in company decisions compared to Class A shareholders. They also have some special rules about transferring them and when they might lose some of their special rights. This structure with different classes of stock is often used to maintain control by a specific group while still raising capital. After all these new shares were issued, Planet Labs now has over 312 million shares of Class A stock and over 22 million shares of Class B stock floating around. This increase in the number of shares outstanding, especially Class B shares with their super voting power, can dilute the ownership percentage of existing shareholders, though it comes with the benefit of hitting performance milestones. But that is not all. There is another layer to this share issuance story involving what they call sponsor earnout securities. These are related to the original investors or sponsors of the company, like Dami Sponsor IVF, LLC. They also had shares and warrants, which are like options to buy stock, that were subject to vesting based on the stock price hitting certain levels. These sponsor shares and warrants were also tied to performance. They were set to vest in stages as the stock price hit those $15, $17, $19, and $21 marks. If they did not vest within 5 years of the merger closing, they would be cancelled, meaning they would just disappear. And guess what? Those conditions have also been met for most of the sponsors' shares and warrants. 3/4 of them have now vested because the stock price hit those $15, $17, and $19 targets. This is good news for the sponsors as they now fully own these securities. It is another indicator that the company's stock performance has been on an upward trend, at least for these specific milestones. So what is the big picture here? Planet Labs PBC is hitting its performance targets as outlined in its past merger agreements. This is leading to the issuance of new shares both to former stakeholders and to company sponsors. The Class B shares with their super voting power are particularly interesting as they concentrate voting control. This filing shows that the company is managing its equity structure based on its stock performance, which is a common strategy to align incentives and reward key players. Now, looking at these results more broadly, Planet Labs PBC seems to be aggressively using its stock as a tool to achieve its strategic goals. The issuance of these earnout shares and the vesting of sponsor securities both signal positive stock price performance, at least against the specific benchmark set in those original agreements, the dual class stock structure with Class B shares having 20 votes per share. is a common way for founders or early investors to retain significant control even as the company grows and issues more stock. However, it can also make the stock less attractive to certain investors who prefer a simpler one share, one vote structure. A key risk to watch is how the market perceives these share issuances. Is it a sign of strong performance and future growth, or simply the fulfillment of obligations from past deals? The company's ability to continue driving innovation and revenue growth will be crucial in justifying these share issuances and supporting its stock price over the long term. Alright, that is our breakdown of Planet Labs PBC's latest filing. What do you think about this strategy of using earnout shares and dual-class stock to manage performance and control? Let us know your thoughts in the comments below. If you found this dive into corporate filings helpful, please hit that like button and subscribe for more regular deep dives. And again, don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you next time.